Hey traders, welcome back to this week's weekly Forex forecast. You might have noticed the Forex markets were a little bit slow last week, and the reason is we have a massive week coming up in Forex. We have 4 interest rate decisions, one of which is the ECB on Thursday. And if we look at the US dollar, you can see this has kind of been chopping around. For those of you who watched Wednesday's video on the Japanese yen, you will know that 8 of the last 10 Decembers, the dollar has underperformed. So we are sitting underneath the major breakout high. I do think we break through on balance, but it may not be now until January based on how the dollar normally performs seasonality-wise in December. So although the dollar pairs are not at the top of my list going into today, I am going to show you what I think is the best dollar pair heading into next week. And I'm also going to show you exactly how I'm going to be looking to play those 4 interest rate decisions next week. Okay, so moving on to the portfolio selection part, and it's quite easy this week to pick out of the quantitative data the top 3 long themes and the top 3 short themes, because the top 3 currencies here, which are green with green arrows, are the Japanese yen, the Swiss franc, the pound. The dollar, the euro, is kind of, bullish and getting weaker, bearish and getting stronger, and this is, likely going to lead up to the ECB on Thursday. And to the downside, we've got 3 which are red with red arrows. So going into next week, the Japanese yen is my number 1 long theme, followed by the Swiss franc, which is my number 2 long theme, followed by pound longs next week. And to the downside, I like primarily the New Zealand dollar, and we don't have an interest rate decision next week out of New Zealand. We do out of Switzerland, and we do out of Australia, which is my second currency to the downside, my second short theme I'm interested in next week. And the third theme, obviously, in that case, is the Canadian dollar. So going to be, in today's video, looking primarily at New Zealand dollar shorts. New Zealand yen, New Zealand franc, and also pound New Zealand, in that case, to the upside. We're also going to look at Aussie yen to the downside, Aussie franc to the downside, pound Aussie to the upside. And we'll also look at the CAD pairs, CAD yen to the downside, CAD franc to the downside, and pound CAD to the upside. And we're going to have a look, and I'm going to show you exactly how I'm going to be looking to play the Australian interest rate decision, the Canadian one, the Euro one, and also the Swiss franc one next week. And to top it all off, we also have US CPI data coming out next week as well. So huge week for the Forex markets next week. Okay, so kicking off the watch list as always with crude oil. Now, crude oil is a short or nothing next week. I cannot buy crude oil. What I want to see is crude oil pulling back and breaching the 69.42. That's the upper bound for this week. The blue levels here, of course, are the projected range. And that's the first range. And the second projected weekly range are the gold levels. So if you breach the blue levels, you're essentially overbought or oversold during the week. And if you breach the gold levels, you are extremely overbought and extremely oversold. And what I'm looking to do here, I'm looking to short the weaker markets above their upper bounds and buy the stronger markets below their lower bounds. And I'm looking to capture 1 to 2 days out of 5 next week in these markets. And in the last 64 setups posted, we've only taken 5 losses. And it's doing this exact thing that I'm talking you through in today's YouTube video. So if we breach the 69.42, we become overbought intra-week. This is the sell zone in this market between these levels. And it's unlikely to take out the 71.68, but if it does, that's the second place I'll be looking for a risk management, so I'll be shorting it again. So we breach this level, perhaps we take out this high. Anytime we enter, in this case, the sell zone, and we hit resistance, that's a great place to drop down and start to look on lower time frames, the 1 hour, the 15 minutes, the 5 minutes. Look for momentum to fade and look for those reversal patterns. In this case, double top, head and shoulders. Very simple stuff, but very effective. If we blast through here and for whatever reason, as unexpected as it is, we take out the 71.68, this is the second place I'll be looking for a 1 or 2 day reversal. And if I'm already short here and I short it again from above here, using the same techniques, looking for those kind of reversal patterns, momentum to fade, when it pulls back, I usually cost average this and I scratch the original trade. So I just exit for a break even. And the third and final thing, because if you short, above this level somewhere, say you breaches this level and you take out this high and it reaches the second upper bound, that trade hasn't worked. So it's time to get out of it and move on to the next thing. The third thing you can look for as well is you can look for the intra-week setup. So you break the moving average tends to move with it. And then you get the break back down below the moving average in the week. The moving average turns and you get this kind of pullback, that first kind of bear flag setup in this case, down to the bottom of the range for next week at the 64.91. Great profit taking target for any intra-week shorts in crude oil. Okay, so kicking off the Forex markets then with the New Zealand dollar pairs. These are my favorite setups heading into next week. Just a quick note, some of these ranges look massive and others look very small, but a lot of this is just the chart being stretched out in different ways. It can distort it. Each of these blue ranges is specifically calculated for the upcoming week and very achievable in all of the assets that you see. So pay no attention to the size of the ranges so much in today's video, because again, it can look distorted depending on how the chart is stretched out. So coming into this week, what I really want to see is I want to see New Zealand yen pulling back. All of this looks like one move. So I want to see a correction. We start to correct. I'm going to be looking to sell the rip, as it were. So we start to break higher. I want to see us pulling back, correcting. We didn't take out the upper bounds last week. It means that there's a good chance we do it this week. And if we breach the 89.27, this is where we enter the sell zone and we start to have the odds turn in our favor for a reversal, at least for 1 or 2 days. And very often, these buy and sell zones actually, for swing trading, pick the tops and bottoms. You start to see the markets moving. They sell off for 1 or 2 days, but then you can actually see the follow through in the subsequent weeks. But I'm going to be looking specifically on a short-term basis. If we breach the 89.27, dropping down to the lower time frames, looking for those reversal patterns for a 1 or 2 day liquidation. If we blast all the way through, it's not expected, but as a backup plan, if we do, the second place I'll be looking for a potential short in this market is the 90.97. So above there, we break above there, I'll be looking for a 1 or 2 day reversal, whether I'm short already or not. If you're not already short and it hits this level, this is a great opportunity for an initial position, because the chance of reversing are around 9 out of 10. They don't hit these levels very often, but when they do, you have a very high chance of a 1 or 2 day reversal. And the third and final thing is, if you start to break back and instead of taking out the upper bound here, you have what's called a fast market. So you start to see it pulling back, but it fails to take it out and you get momentum back in direction of the trend. In this case, you can look for those intra-week opportunities, which would be a bear flag in this case, back into the moving average, moves away, down to the bottom of the range. Profit target next week is the 85.86. Next is New Zealand franc. Now we do have the SNB on Thursday, but because it's quite near the end of the week, I'll be looking for opportunities before the interest rate decision. So what I'd like to see here is look at this breakout. We're starting to get momentum for the first time. Look how choppy it is. Choppy, choppy, choppy. And then nice momentum to the downside, breaks out. I wouldn't be surprised to actually see this going intra-week, but then we do have an interest rate decision, so it remains to be seen. But what I would like to see is primarily if we can pull back and we can breach the 0.51986, this is where we enter the sell zone. We become overbought during the week. This is where I'll be looking for a 1 or 2 day reversal to the downside. If we blast through here, again, very unexpected. You usually need some kind of catalyst to do that. Could happen on Thursday, but if we blast through there and we take out the 0.5273, this is the second place. I'll be looking for a 1 or 2 day reversal. So you do need a catalyst, but it's unlikely to do that at least before Thursday. And the third and final thing is you get the pullback, and you could very easily see this next week. And instead of taking out the upper bound, because we've got nice momentum, you get the sell-off back in the direction. Usually you get kind of 1 or 2 of these bear flags in this case in a week, and you get the pullback, hugs the moving average, and that's the opportunity to look for the short down to the bottom of the range at 0.5049. Great profit taking target to the downside next week in New Zealand franc. And the final New Zealand pair I like next week is pound New Zealand. Look at this consolidation breakout. Really nice breakout. We're starting to get momentum. You're starting to see the moving average turning up. So we're back into a kind of trending mode here in pound New Zealand. And what I'll be looking for is if we can pull back, primarily, I'd like to see this come back, breach the 2.1631. This is where we enter the buy zone next week. And especially if we pull back, breach this, and we start stair step, in other words, we retest some of these broken highs, that would be a great place to start to look for momentum to fade. Looking for those reversal patterns for a 1 or 2 day liquidation, in this case to the upside. So shorts liquidating, you get a bullish reversal. The second thing next week I'll be looking for, but not expecting, is if for whatever reason we break all the way back down. And again, because we've broken out with the trend starting to form here, if we took out this low and we took out this lower bound, you've got to think some unexpected catalyst has come in and we've got a major reversal. So it doesn't happen very often. But if it does, it's always good to have a backup plan. If I buy it from below this level and it pushes all the way down here, Below the 2.1409 is the second place. Whether I'm long already or not, I'll be looking for a 1 or 2 day reversal. And the third thing is, start to break back down below the moving average. Instead of taking out the lower bound, we accelerate back in the direction of the overall trend. You hug the moving average, you turn away, and that gives you your bull flag set up into the 2.2075. Great profit taking target to the upside next week in pound New Zealand. Okay, so moving on to the Australian dollar pairs, and we do have the RBA on Tuesday. They're expected to hold interest rates. And when it comes to interest rate decisions and you have the press conference, it's very difficult in advance to know which way the market's going to go, because you could get, a cut as expected, and then in the press conference, the governor of the central bank could say, we've cut today, but we're not going to cut anymore like we thought we might in the near future. And actually, you can end up with a bullish reaction instead of a bearish one on the actual rate cut. So going into next week, what I want to do is I want to be reactive to the interest rate decision. I want to do that in the following way. Coming into the interest rate decision, we're unlikely to do anything. Markets just contract, their volatility decreases, and you just see these markets chop around before the interest rate decision. But once the interest rate decision comes out, it's essentially going to do one of three things. Either it's going to be pretty neutral. In other words, it's a non-event. Maybe it comes out as expected, and we don't really see any kind of major moves in the market. In that scenario, it's just a normal setup, just as we're looking at any other chart. If we get, in this case, a bullish response from the Australian dollar, a bullish catalyst can push this market towards its second upper bound. But I still only want to be short the Aussie dollar next week. I cannot buy the Aussie dollar next week. And so my bias is still to the short side. But if we get a very bullish reaction, I would still be looking for a 1 or 2 day liquidation from above and then below the 99.53. And the third and final thing is, if you get a bearish reaction, in this case from the Australian dollar or from the RBA on Tuesday, and you chop around, you can look for the intra-week breakout. So very simply put, we get a non-event on Tuesday. I'm just looking for the basic setup, a breach of the 97.71, and this is where I'll be looking for a 1 or 2 day liquidation after Tuesday. I'm only going to be trading this after the interest rate decision on Tuesday. If we get a bullish response, this is where we can see this blast all the way through. It's not really expected still, but it can happen. And with interest rate decisions, this is where you do tend to get tests of the second upper and lower bounds. If it does that and trades into this low, we're still making lower lows. This is still a market I want to be short, but this would be above the 99.53. This is where I'd be looking for 1 or 2 day liquidation. And it may be the case I get caught short. Maybe we push above here, I short it once, and then it's stronger than I expected, and I have to short it again and risk manage it, right? That's possible as well. We don't know. But if you see something in the press conference which is very hawkish, in other words, it's bullish for the Aussie dollar, let's say they came out and unexpectedly raised rates, that would be something where you might want to filter. I'm not saying they're going to do that, but hypothetically, that might be something you want to filter, the first short and look for the second one instead. The third thing is we start to chop around and you get the momentum in the direction of the overall trend. And that comes from a bearish or a negative outcome. Perhaps they cut rates unexpectedly. You could look for the pullback, and you can look for that bear flag follow through post RBA on Tuesday into the lower bound at the 94.06. Great profit taking target to the downside next week. And I'm going to be looking at trading all of the Aussie pairs the same way. Okay, so next is Aussie Franc. Really nice breakout. Look at this reversal. We come up, we break the low, we kind of consolidate above it, and then we get the liquidation and the momentum. Really nice breakout from below this low over here. And you see the momentum coming in. Momentum precedes price. This should be continuing lower, but we do have the RBA on Tuesday. So I'm going to be waiting for that to come out. If it's a neutral outcome and it's a non-event, I'm going to be looking for this to pull back just as I would any other market. Breach the 0.5694. This is where, above here, we enter the sell zone. Now I'm going to start to look for a 1 or 2 day liquidation back inside the range. If we get a very bullish outcome from the Australian dollar and we push all the way into the 0.5773 and above it, this is the second place, whether I'm short from over here or not, that I'll be looking for a 1 or 2 day liquidation back inside the range, back inside this range in that case. And the third thing you can look for is the consolidation, into the RBA event. And then from Tuesday, you get the RBA coming out, breaks back in the direction, so you get the sell-off, you get that interest rate decision driving the price lower, but usually it won't go all the way to its lower bound, just in one day, because it's a weekly range. So even if you get a strong sell-off, usually you still get 1 or 2 days where it pulls back, and then you get the follow through. In this case, down to the 0.5534 is the bottom of the range next week in Aussie franc. The final Aussie pair is Pound Aussie. Again, if we get a neutral outcome from the RBA on Tuesday, I'll be looking for this to pull back, to consolidate, to breach the lower bound at the 1.9734. This is where we enter the buy zone, and I'll be dropping down, looking for those reversal patterns on lower time frames for a 1 or 2 day liquidation back inside this range. If we blast all the way down and we take out the second lower bound because we have a very strong Aussie dollar, pound would then sell off hard. Whether I'm already long or not, this would be the second place below the 1.9528. I'd be looking for a potential reversal back inside this range next week. And again, I can only be long pound Aussie or do nothing. I cannot short this market regardless of the RBA on Tuesday. And the third and final thing is, as always, you get that kind of choppy market, and then you get the drive higher on the interest rate decision, pulls back, and you can look for that bull flag set up in this case into and above the upper bound next week at the 2.0146. Once you enter this area, this is essentially the area you want to start looking to book profits on any intra-week longs in Pound Aussie next week. Okay, so moving on to the third favorite short theme that I have next week, which is the Canadian dollar shorts. We have the Bank of Canada on Wednesday. I'm almost certainly going to be trading these markets only after that. By these markets, I mean the Canadian dollar pairs. And I'm going to be trading them in exactly the same way we just discussed with the RBA and the Australian dollar pairs on Tuesday. So what I want to see is if we get a neutral outcome, I can either be short or do nothing. I cannot buy this market next week. We're expecting a 50 basis point cut out of Canada next week. Now, again, we could get a 50 basis point cut, and if it's as expected, you might not see too much of a response. So if we have a neutral outcome, again, we're looking to be reactive. We have a neutral outcome, we trade above the 107.72. This becomes just like any other market without an interest rate decision. Above here is where I'll be dropping down, looking for momentum to fade, looking for those reversal patterns for a 1 or 2 day liquidation back inside the range. If we get a very bullish outcome from the Canadian dollar or from the Bank of Canada on Wednesday, maybe they're expected to cut 50 basis points and they only cut 25. Maybe they don't cut at all. Again, I'm not saying that's going to happen. I'm just giving you a hypothetical of where you could see something which is supposed to be a bearish event turning bullish. We get the Canadian dollar blasting all the way into and above the 109.45 and into these lows. This is the second place I'll be looking, whether I'm short already or not. And if it's a very bullish outcome, if they cut only 25 basis points or not at all, I'd probably just filter that first. I'd probably just sit it out. And if we blast all the way through, I'd be looking for a short above the 109.45. If I get caught short, I'll just risk manage it, add to it a second time. And the third and final thing is you start to break up and we get the big sell-off to the downside. Maybe we get those 50 basis points worth of cut and they come out and say we're going to cut 50 again next time. That's where you get your bear flag set up into, in this case, the lower bound at the 104.24. Next is CAD franc. I can either be short or do nothing next week, regardless of the outcome of the Bank of Canada. Really nice head and shoulders reversal here. You can see that. There's the break. There's the momentum. It confirms this as a bigger reversal pattern. So regardless of what happens next week, we should be seeing further continuation to the downside. It's actually risk off. We're seeing risk off moves coming into Forex markets. Now, if we can pull back next week, let's say we get a neutral outcome and we pull back and we test, in this case, the 0.6272, we become overbought intra-week. We enter the sell zone and look at this. We're retesting the prior lows of the head and shoulders reversal pattern, the breakout point. This would be a fantastic place next week to start to look for a short opportunity. 1 or 2 days down is the short-term opportunity I'll be looking for. But if it does that, you can see much bigger moves away from that in this case. Why? Because it's a bigger reversal pattern. We stair-step it. We should be at least taking out the lows and then we push all the way down, in subsequent weeks. Great setup though next week out of the Canadian franc pair, if we can get it. If we get a very bullish outcome from the Canadian interest rate decision and we breach the 0.6337, it's the second place, whether I'm short already or not, that I could be looking for a 1 or 2 day reversal back inside the bigger range. And the third and final thing is if we start to pull back, we don't take out the prior low, come back and test it, or take out the upper bound. Instead, we just get the 50 base point cut and you get the next momentum leg down. Look for the pullback into the moving average, which tracks it down, and that move away into the lower bound and below it, in this case at 0.6140. And last but not least, we have pound CAD. I can either be long or do nothing, cannot sell this market. What I want to see is on a neutral outcome, a non-event, I want to see this market pulling back just like any other market, stair-stepping this high. Really nice setup once again in this market, and we breach the 1.7878. We enter the buy zone next week and we take out a prior high. This is a great place to start to look for at least a 1 or 2 day reversal to the upside. If we get a very bullish outcome for the Canadian dollar and it sends pound CAD all the way down to its second lower bound, this would be the second place below the 1.7721. I'll be looking for a 1 or 2 day reversal back inside the bigger range. And the third and final thing is we start to pull back, we flag, and then you get the next leg up off of the interest rate decision. Very weak Canadian dollar response. You can look for that bull flag setup post Wednesday, so after the interest rate decision, into the upper bound at the 1.8192. And just to quickly finish off with the dollar pairs, the dollar is not one of my favorite currencies going into next week because it's just chopping around, it's not doing much. But you can see with euro dollar, which we cover every single week, there is a gap down here that I think probably needs to be closed. In fact, we kind of attempted to do it down here, but I do think we're heading lower. However, ECB on Thursday means this market's likely to chop around and we may not really get anything out of this market until after Thursday. This is probably one for next week. If we do breach the 1.0674, let's say that it's, a non-event on Thursday, this is where I would be looking for a potential 1 or 2 day reversal to the downside. If we blast all the way through the 1.0780, this would be the second place. I'll be looking for a 1 or 2 day reversal to the downside, whether I'm short already or not. And intra-week stuff, again, I'd probably leave because with ECB on Thursday, this market is likely to chop around into Thursday's interest rate decision. So if we're going to get a choppy euro and probably a choppy dollar, the best dollar pair I think heading into next week is New Zealand dollar. I favor all the other markets we've already looked at, but if New Zealand dollar can push higher, can breach the 0.5908 and take out this high, this is going to be a place where I'm going to be dropping down next week and seeing if we can get a 1 or 2 day reversal back inside this range. If we blast through, and it might happen maybe on ECB, but I don't think it's likely. But if we do blast through and we take out the 0.5988, this will be the second place next week. I'll be looking for a 1 or 2 day reversal. And we've already broken down below the moving average, so you could look for that continuation down into the lower bound next week at 0.5749. Great profit taking target for any shorts in New Zealand dollar next week. Okay, so wrapping up the video as always with gold and silver. Now I have a kind of bullish to neutral bias in the dollar. December is a month it kind of underperforms. And if you look at gold and silver after big runs, they're kind of ranging. You could probably buy or sell gold or silver from the upper and lower bounds next week. But what I'm going to do in today's video is present gold to the downside because I think it's a slightly better short, and silver to the upside as I think it's a slightly better long play next week. I think silver has the potential to outperform gold next week. So what I'll be looking for in gold, and they're not the best setups, but we cover them every single week, so it's nice to have some options. What I'll be looking for is if we can push higher and we can trade above the 2683.55, this is where we enter essentially the sell zone. And this is where I'm going to be looking for a 1 or 2 day liquidation back inside the range. If we blast through here and we take out the upper bound at the 2733.91, whether I'm short already from above this level once or not, this is the second place. I'll be looking for a 1 or 2 day reversal in gold. And because the markets are choppy, I'll probably leave the intra-week stuff in gold and silver because those intra-week breakouts are best in the markets which have strong trends. And finally, we have silver. Now, again, you could probably buy or sell this because the dollar is kind of neutral and the markets are choppy. So if you're range trading, if you've got a ranging market, you can sell resistance and buy support. But if you're in an uptrend, you only want to buy support. And if you're in a downtrend, you only want to sell resistance. If you're ranging, you can buy support and sell resistance, right? It's a decent policy. So going into next week, I would leave the intra-week stuff in gold and silver because they're not strong trending markets. However, if we get both gold and silver testing their lower bounds and we start to take out these lows, below the 29.84 is a place that I will start to look for momentum to fade and for a potential 1 or 2 day reversal back inside the range. And if we blast all the way down to the 28.71 and take this out, this would be the second place, whether I'm already long or not, that I'll be looking for a potential 1 or 2 day reversal back inside the bigger range here with the gold levels in silver next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.